Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today we will finally take a look at the euro currency, but before we will start with the euro, I just would like to say that our Canadian dollar target, long-term target, has been completed yesterday. On the Yellen speech, market has hit 134.50 destination point, and by this action it has completed the really huge ABCD pattern on the monthly chart. So the target on the Canadian dollar has been hit. Right now we just need to watch what will happen next, but probably some retracement in respect of this target we will see. Maybe it even will turn in some tradable pattern on the lower time frame chart, on the daily chart, maybe even on the monthly. On the weekly. That's why we will keep an eye on the Canadian, and if we will see something interesting, we will definitely prepare an update on its currency, since really, as my practice tells, that every time the market hits really big target, it creates around it a lot of different patterns on the different scales, time frame scales. So on the Great British Pound, the picture is mostly the same. Market stands in the same area, but the double repo pattern that we have discussed yesterday hasn't been confirmed yet. So as soon as it will be confirmed, maybe we will see the upward retracement. But right now, the market hasn't created it yet. In general, the context on the Great British Pound remains bearish, and we will continue to monitor the action to the 145 target on the Great British Pound. Let's now turn to the euro currency. Well, guys, following our recent discussion on the euro currency, we said that market right now stands in upper channel, but the situation right now is very tricky, because as soon as market hasn't shown deeper retracement as it was here, right here, it creates the situation where the harmonic swings, here the harmonic swing has finished right at the support line, but here this harmonic swing, as soon as it will be accomplished and if it will be completed, market will break this area. But breakout of this area will mean the turning the context to bearish, and this will lead to the consequence of the chain of the targets. First it will be 108, then it will be 104, and then finally this will be the parity. That's why the breakout of this support area and this support level will simultaneously and immediately will mean that we stand on the road to the parity. That's why the current situation is very important. This moment is really important on the euro currency, because the breakout of this consolidation will trigger the bearish setup on the monthly chart that suggests moving below 104. And as soon as market will move below 104, it means definitely it will reach the parity, because it's just very difficult to imagine that the market makers and hedge funds will leave the parity target where they could grab a lot of sweetie long-term stops and huge positions intact, just standing the 200 pips above it. So that's why as soon as we will get the direction to the 104, it simultaneously will mean that we will get direction to the parity. But right now market is moving lower, and personally, guys, to be honest, I see the bearish development in this action, because if market is really bullish, it's already should continue move higher. But this hasn't happened, because market has shown the leg up, shows retracement, and that was the upward continuation. If it returns right back down to the retracement and wasn't able to move higher here, it suggests the bearish action. Market mechanics looks bearish. Also, market has failed to pass through the monthly pivot point again. Has failed to pass through it and drop lower. Based on the Yellen speech, it was really hawkish for at least in the short-term perspective, for the US dollar. That's why right now it's pressing on the euro currency, and the overall situation looks bearish for the euro currency. Trend is bearish here as well. So my expectation is just my thought that I suspect that really we will see the breakout, because this is not the call for taking short position immediately, but overall action mostly suggests that's market really heavy, looks really heavy, and it's probably we will see some action down on the euro currency. But this is just my feelings, some expectations, so I just sense that probably could happen based on the action. But that doesn't mean that we need to immediately take the short position, because we need to base our trading on the patterns, on the charts that we are analyzing. Other words, why we do this. So on the 4-hour time frame chart, there is still tricky moment exist that we should monitor during today's session. Here is our pattern that we have discussed, and we justify the possible retracement here by this pattern. This ABC top 618 minor extension that has been reached. Market has shown retracement out of it as soon as it has been completed, and right now market has dropped again below the weekly pivot support one. That also looks very bearish. In general, this action suggests the downward continuation to A, B equals CD target that we have on the daily chart, this one, particular to 108 lows. That's why I said that will be next destination. When the market has touched the 618 minor target, small retracement, downward continuation means moving to the next target. But at the same moment, take a look what the A point we have taken. This one. This is the point where the action really has started, and the downward action has started. But we also have another A point, the major A point. I call this major not because of the importance, but because of the just absolute top here. So if we will take this point as the ABC, we will get another target. This will be slightly lower, as 11070 approximately, and that is the tricky moment here. Just let's calculate the extension. That's also a tricky moment here, because before taking short position here, we should get the confidence that we will not get the wash and rinse of these lows and upward reversal. That's the major risk here, because existence of this target could mean that market just gravitates to its level. Maybe market will form here the butterfly, by the way. Gravitates to this target, and as soon as it will hit it, that will be also the support. The 1080 area is precisely this 50% support area, and as soon as market will hit it, it still will have the pretty room till the support. It will not mean the breakout out of this. We need the breakout will mean if market will move below 110 even, so we'll break this area. But until this will happen, market has this larger target, and we could get, for example, wash and rinse. So market will hit this target, clear out the stops that have been placed here, and immediately will start upward action. That's also possible, and that is the risk for us. So before taking the short position, we need to be sure that this is not the wash and rinse. We need to see the hitting of this target and moving through this target. As soon as market will continue to move lower and will hold below these lows, we will get the confidence that it's not the wash and rinse, and market indeed has started move down. In this case, we could start to think about the taking short. That's an important moment. And after that, we could turn to the hourly chart here, guys. I put the levels that could be useful when we start to think taking the short position. So some confidence support, although the market has drifted a bit lower while speaking, these levels stands slightly higher than they should too, because currently market has created the new low and they should be a bit lower. But anyway, that is the confidence support. That's the major 618. Don't forget also about the major 50% that euro likes. That's the second question, and we will turn to this moment later if we will get the confidence that market really is continuing to move lower. But right now, today's task on the euro currency is watching for the wash and rinse, or better to say, the watching of the wash and rinse absence, so that market should break through this area, break through this target, and continue to move lower. That's our major task to see before we will start to think about the taking short.